There's always technical difficulties at the end of the day. So as I was saying, and this is a even understated estimate, the future of embedded finance is seeing a tremendous growth, but it's nothing new. We're all using embedded finance today, and technology can always have fun with us as well. But anyways, 600 billion is definitely a conservative estimate of how embedded finance will flourish into the future. I feel like we're doing a bit of a recap here. So what is embedded finance? If you missed the train today in terms of understanding what embedded finance is, I've got to do a bit of a recap here. So embedded finance for me is really about how you decompose the value chain. How do you make sure that the bank are not delivering end-to-end anymore? They're not the manufacturers, they're not the distributors. They are, in fact, part of the equation, opening up for more value in the ecosystem by working alongside platforms, so that platform enablers, and essentially also with the regulated entities. So it becomes more of a focus on actually delivering these embedded finance solutions in the moment of need. So the typical example here is that you're not going to go and get a mortgage. The reason why you're going for a mortgage is essentially because you're trying to buy a home. So getting a home is really what is going to drive you to provide the access to this new ecosystem. There is a lot of talk about brands, big brands. I think what is most important for me, coming from the SaaS business perspective previously in the Nordics, is that if you deliver a SaaS platform, yes, in 2.0 you could deliver payments as well, but really it becomes interesting when you can drive more financial services inside to your platform and deliver more stickiness to the platform. So in this very simple example that Stripe is using, we've got a very interesting proposition because the hair salon, the platform that provides access to appointments and other things, are no longer only limited to provide access to appointments and scheduling and everything that you need as a hairdresser. No, they are also providing access to financial services, to payments, to give you a current account, to have access to liquidity and working capital, which is essential for any SMEs to have readily available. So if you look across the different value chains that are now being decomposed, there is a lot of opportunities here for the different players. The brands and platforms can focus on their core proposition. They can focus on having more reach. They can provide more services, in turn really providing more stickiness, so they make sure that your customers are sticking, or their customers are sticking around. But also it provides an access to a new revenue stream for the banks, for the enablers, but it also provides much more focus on data insights. Data is something that banks are struggling with today, but if you harness data in the right way, you can actually leverage and get a lot of insights from it, and thereby increasing your value proposition. And as has also been the case today, is that banks are delivering general products. The products they're delivering is not something that is catered to the individual or the different SMEs or the. So by having access to an embedded finance, you also are able to diversify your offering and essentially expanding your balance sheet. Wingspan, a US example here, is somebody who's really taken the potential of using their SaaS platform and expanding with banking services and payment services as well. It goes to show you that if you actually open up then their revenue stream, the revenue stream is not only coming from SaaS subscriptions as typical within SaaS models, it is also coming from the financial services. So it's FX rates, it's exchange rates, it's all the things that actually can bolster their revenue stream and make them more scalable and more sticky for the end consumer. So if we look at some of the numbers, and these are just some of the examples, payments will still be king. We all use it today. We all see it in our everyday interactions with the platforms out there, such as Amazon and others. But lending is also going to come in and be even more fruitful for the market in terms of reaching the market cap. But lastly, I think at the far end here, we also see a significant increase in the infrastructure. The infrastructure providers, such as Kelvin from Audax, the ones that are going to deliver the capabilities that the banks cannot do because of their legacy, their core infrastructure, those are also going to be the ones reaping the benefits of this revenue increase in tomorrow. But what has also been kind of the topic for today is that the business model is also changing. The business models are going to be much more about B2B. It's going to be about B2X. This is where we see the largest increase in terms of reaping the benefit of open finance or embedded finance. And I think from a vertical perspective, from an industry perspective, we've all used Talabat, we've used the different mobility vehicles today. We've all used them as part of our daily experience. But what we see currently is, of course, that more of the nascent industries are coming in now and also reaping the benefits of embedded finance. We also see new industries. These are more of the typical examples, but nonetheless, this is a growing trend that will only going to increase going forward. And as with anything, there's always a Gartner hype curve. So at the far end, we've seen Stripe and Adyen being excellent in terms of actually understanding how to reap the benefit of this new ecosystem. But at the far left, we also see some of the more complex areas taking on some of the challenges in terms of addressing wealth, in terms of addressing crypto and other means. So we will increasingly see that all these different financial products will come in and find their sweet spot in terms of applying embedded finance into everyday life. So you can say, what is it that makes it special now? I'm from the Nordics. The Middle East and Africa is a very interesting market. And if you look at some of the market statistics, we see a tremendous interest and a tremendous potential in this area of the world. There's obviously a young population, a growing population that is digital savvy, that has kind of chucked away the cash in post-COVID sessions or post-COVID era. And they also want to pick up the new digital solutions. This is just an example, but I think it always goes without saying that if you walk the halls of GITEX, both here at the harbor, but also at the World Trade Center, you'll find that this is a very flourishing ecosystem, something that keeps growing every day. And this is only going to increase going forward. And I think the tenacity that I've seen in this region, even coming from a very innovative Nordic region, I think the tenacity and the willing to change and adapt and test out certain propositions is what makes this region really special. One of the things that I believe in the most is a mindset change. A mindset change that is all about platforms, about understanding how to interact with an ecosystem. Gone are the days where the business models and the big conglomerates were kind of based at the top of the pyramid. Those business models are no longer the ones that are taking the most out of the market. The ones that are leading now are all the ones that have got a platform-based business model. So if you want to succeed in tomorrow's future, you have to understand how to step into this ladder. You have to understand not to be focused on the platform or the product. You have to gradually go through open banking, open finance, go into embedded finance, as we discussed today. But in the future, the ones who are really going to benefit is this ecosystem orchestrator, the one that understands how to orchestrate the system, the ecosystem around them. These are the ones that are going to survive. These are the ones that are going to flourish in tomorrow's markets. So if you know that, then you're on a happy path. I've also worked for telcos for quite a few years, and I think Twilio serves as a good example of how you can reap the benefits when the value chain gets decomposed. Twilio, you probably have used them, you've known them. They managed to capture the essence of how to build a developer-centric communication platform that anybody, the brands, the platform alike, could reap and dig into. What they also did is that they also saw a great increase in their market cap. I know that this market cap maybe is slightly old and Twilio has gone down a bit, but nonetheless it still proves the trend that if you understand how to be that middleman, if you understand how to actually enable these capabilities to the brands and to the platforms, then you will stand the benefit of this decomposed value chain going forward. So it leaves with a question that has been asked a few times and also answered a few times today. If you are an incumbent bank, where do you place yourself? What's your play? Will you build, given that you've got a lot of legacy, given that you've got maybe a mindset challenge, a transformation that's ongoing? Will you invest in somebody else that's trying to do it? Will you acquire somebody who maybe is struggling with a business model currently, or will you partner? And as we saw today, we've got Audax, who has eventually grown out from a banking womb and standing up their own company, but you also got the likes in the UK of NatWest partnering up with Ino out of Poland, who again are bringing a new proposition to market. Time will tell, because these business models, these ways of thinking are still nascent. It's a new industry. We haven't seen everything yet, but it is definitely exciting times. And one of the key capabilities that I believe going forward, which has also been mentioned a number of times today, is partnerships, partnerships, and partnerships. If you want to do innovate, or you want to do innovation, you have to understand how to leverage partnerships, whether that is through fintechs and banks partnering, if it is with your brands and the platforms partnering, it is something that's going to be a key value driver going forward. So, as Brett King says, the ones who are easiest to play with basically are the ones that are going to make it through. And this skill of recomposing, the ability to rapidly recomposing and testing out certain value propositions when the value chain is being redone all the time, this is going to be important going forward. It's going to be important because if you are not testing certain things out, if you're not nimble, if you're not willing to take some risks, then you're not going to be the one winning the market share. You're not going to be the one proving that this particular value chain, this particular embedded finance proposition is actually going to drive and be successful. Because partnerships are happening every day. Partnerships, you can just go to LinkedIn, you can go to pretty much any SoMe channel, you will see partnerships being disclosed, press releases coming out. And it's because it's a very interesting and thriving markets where new partnerships are either successful or unsuccessful, but you have to do, what you have to do is you have to try and you have to test whether this is a win-win situation for both parties, and you only do that by trying. Another part is vertical platforms. So we've all seen this before, the typical platforms and the typical industries that are gradually coming into embedded finance. But I think the focus with software and technology allows, especially the SaaS platforms, to focus on their particular business, their particular niche. So if you want to build the greatest, let's say, pizza shop in the world, you can do that fairly easily, and you can provide all the means of having inventory, having financial services at the fingertips, and you can provide the best platform that will serve anybody who wants to set up a pizza shop. It's possible today because you could get the unit economics now down, and that's also why I see that the typical way of looking at industries, looking at verticals in industries, are not necessarily going to be the same tomorrow. If we take, for instance, the creator economy, if we've had this conference, let's say 10 years ago, nobody would have talked about the creator economy. It's a new vertical, a new niche, a new way that you can capture the market. And it's a big one. There is a lot of potential in terms of if you can find a system that serves the creators of tomorrow, you can have a very successful business. And this is just one vertical. You'll see many other verticals popping up over time. Lastly, regulators. We love them, we hate them, but we have to live with them, right? Regulators are going to be the key, and especially I think in this region, we see a lot of proactiveness in terms of regulations. We see regulators that are trying to push the boundaries, that are trying to be the catalyst of change, which is also causing them to have certain pain points. There is being introduced currently in the MENA region, open banking, open finance, initiatives around AI, bringing more cloud platforms to the region. There's so many things ongoing at this moment that even this one is also outdated as we speak. But nonetheless, I think what is going to be key is that the regulators hold the key for this. They hold the key in terms of enabling and supporting the embedded finance ecosystem going forward. But it's also going to be something of a dangerous thing to mess with, because as we're decomposing, as we are opening up the ecosystem, as we're opening up the value chain, we too will see certain challenges when things break. We had earlier mentioned about certain banking companies or banking as a service platforms that act as the intermediary out of the US that are struggling at the moment. We don't know how that's going to end, but will they hold the end consumer reliable, or will it actually be something that they can fix based on the regulations that are in the US? Nobody knows yet, but it's very important that while this is being rolled out, that anybody can feel safe in terms of engaging with embedded finance. And we already see here in the MENA region, I too have been engaging with certain value propositions or certain apps that are not necessarily providing the best liability chain. So I don't know as an end consumer that I'm actually engaging in services where I'm actually violating or breaching the terms and conditions from my bank. I'm not being told. And so this is where the regulators come in. This is where they have to make sure that there is a fine balance between how to push and be the catalyst of change, but still protecting the end consumer's rights. These are times when new business models are getting proven. Nobody knows what the future is going to hold, but it's definitely going to be interesting going forward. And I think the future is bright for embedded finance. There's huge potential. There's a lot of things that we do not know yet, but as with anything, it starts with trying. So thank you so much for listening to me babble on for 15 minutes. And yeah, Simon.
Thank you very much, Michael. Do we have any questions for Michael? Well, I have one anyway, in any case. You've been, you're in this region now. You've come from the Nordics. We heard a lot of talk today about the kind of, sort of the Cold War between fintech innovators, technology, and banks. There's talk of partnerships. Do you want to place any bets on, in this region, who's likely to win? Are we going to see telecom? Are we going to see local tech, local or big tech? Or are we going to see the banks sort of win the embedded finance race? Who's going to get there first, do you think?
So I think, talking to a lot of banks in the region, there are definitely a lot of ambition in terms of rolling out banking as a service. Whether it's going to be through partnerships, whether it's going to be actually owning the interface, whether it's going to be exposing your own brand, I think that's still, time will tell. But if we look to the US, I think we're seeing certain indications that, as I think Kelvin also mentioned earlier on a panel, that having this middleman is an intermediary step. It's an intermediary step because at the end of the day, what is really going to be the most important thing is that the ones you hold accountable for your financial worth, those are the banks. And the banks are the ones that actually knows how to handle this. And as soon as they find the right partners to work with, then they are also going to find a way to embed themselves in the embedded finance.
Where would you say are the skills or the technology shortages, both at the level of the bank, talent and partnerships and onboarding or risk or whatever it might be, but also at the level of fintech? What are the kind of missing components, do you think, that some of the innovators that are in the audience and at this event could perhaps sort of help fill?
I think so. If I draw parallels to what I'm used to from the Nordics, I think there was a while back a panel where we had a couple of the CEOs of the banks discussing the issue of why is it that when you come into UAE, for instance, that you can pretty much log into any governmental services, but why is it that you still have to use your own username and password to log into any bank here? Why is there not a national ID rolled out? So it got me thinking again, reflecting back on the Nordics, where pretty much anything I do, any place I log in, I use my national ID. It might be insurance companies, it might be other companies, it might be a fly trying to hit my face. But anyways, it's really gonna be one of these fundamental building blocks. All boundaries. I think pushing for like fit
Absolutely. I think there are certainly moves in that direction, aren't there? And I suspect, come back here next year, we'll have some more advances in that. Please give Michael a good thanks for closing off our day.